Hello, we are Sharked, and today we will be talking about the stock market. In our last video, we looked over what investing is and why it is so important in our lives. If you want a recap of this, check the video in the description and make sure to subscribe for more content like this. Before we get into what the stock market is, let us explain what stocks are. A stock, also known as equity, is a share of a company which entitles the holder to a fractional ownership of that company. In simple terms, buying a stock of a company basically means that you get to own a certain percentage of that company. So, if a company has 100 stocks in total and you buy one stock, then that means you own 1% of that company. Then what is the stock market? It is very simple. It is a market of stocks. It's just like a normal real-world market, where various goods are sold or bought. There are numerous numbers of markets around the world, and each of them have a different opening and closing time. For example, the New York Stock Exchange, known as the biggest stock market in the world, opens at 9:30 a.m. and closes at 4 p.m., while the Tokyo Stock Exchange opens at 9 a.m., closes at 11:30 a.m., reopens at 12:30 p.m., and closes at 3 p.m. But how will buying and selling stocks profit you? Again, it is like a normal real-world market. You buy an item and you sell it at a higher price. But what is different is that individuals can't control the price of a stock themselves. This is because stock prices are collectively affected by how much the investors are willing to pay for it. What that means is that the more demand for a certain stock, the higher the price becomes, and vice versa. When the expectation for a company to grow rises, the demand for that company's share rises as well. This causes more demand for its stock, thus increasing the stock price. Therefore, when you sell the stocks when the stock price increases, the differences between the increased price of the stock and the price you bought the stock for becomes your profit. For example, let's say you bought one share of a company for $10, and the company announced the release of a new promising product. The investor's expectations for the company to grow rises and increases the stock price to $15 a share. When you sell that one stock you bought earlier, you get $15. Subtract the original $10 you used to buy it, and you get a profit of $5. So the most common way to gain profit off of the stock market is to buy low, sell high. But that isn't the only way to get money out of it. There's a method called short selling. Short selling is essentially sell high, buy back low. How this works is simple. You borrow a certain set of stocks from a lender that you predict will fall in share price in the future, and you sell it immediately to liquefy it, or cash it out. Then, when the stock price drops, you buy it back again and give the stocks back to the lender, who is paid an interest or a commission for this service. The difference between the sell price and the buy price becomes the short seller's profit. Until now, we have only talked about stocks, but actually there are many more types of investment in the stock market. If you are looking for a stable investment, there are bonds. Bonds are essentially loans made by an investor to a borrower, usually corporations or governments that want to finance projects and operations. If you want to invest in a specific sector or an industry, you can choose to buy ETFs, mutual funds, or index funds. In simple terms, these are just a basket of stocks or other assets that are categorized together and can be bought and sold on an exchange, similar to the stock market. If you want to save up for your life after retirement, there are investments specialized for retirement, like the Roth IRAs. There are also options, which can be risky, but can give the buyers to buy or sell an asset at a specific price at any time, even in closing hours. Now, how do we buy these things? Back in the day, it used to be that the only way to purchase these assets was through a human broker. But nowadays, we can buy any of them through online brokerages. For example, stocks and cryptos can be bought by individuals through stock exchanging apps like Robinhood, Webull, Ameritrade, etc. Although it can be costly to hire a broker and you would need a bit of money, at least $1,000 to start, using the help of a human broker can be very resourceful as they can give you advices on your investments. Though on the other hand, some stock apps allow commission-free trading and users can start with as little money as $1. Now that we've talked about the basics of the stock market, did it make you want to invest? It probably made you think, what an easy way to increase your wealth. But the reality is harsh. Volatility and losses are inevitable because the stock market is unpredictable, even by the greatest investors of all time. There's no way of completely eliminating that risk, but you can reduce it by having the right mindset and strategy. The most important things to keep in mind are to control your emotions, have a long-term perspective, and keep your eyes open to the world. Warren Buffett, one of the greatest investors of all time, once said, "The most important quality for an investor is temperament, not intellect." If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn.
Investing is like gambling.
No, absolutely not.
If you carefully research, buy the right stocks that have long-term potential growth, and be patient, it becomes an effortless way to increase your wealth significantly and a ticket for a life filled with happiness and liberty. In our next video, we will talk specifically about stocks and how to build your portfolio. Don't work for money. Let money work for you.